All right. While most traders feel like quitting because after a huge losing streak, I am up over 92% year-to-date performance. Here's September 19th as of right now. And I'm going to show you the framework in today's video that will shift everything and get you out of this losing streak. So if you feel like quitting, please don't and just watch this video, okay? So let's just get into this. I have a list here that I have on another screen, but I'm trying my best to make this as best as possible. All right, framework or step number one, expect to lose every trade. Okay, I know this sounds counterintuitive. It's like, well, I don't want to lose a trade. I get it. I don't either, but it's gonna happen. It's just part of the game. By default, it's gonna happen. When when you press buy, you're already by default telling like I'm gonna lose this trade. It's very possible, right? But think of it this way. This is a game of probability, okay? This is think of it like flipping a coin. You have a 50% win rate. Let's say that you flip a coin 10 times. 50% chance of let's say you pick heads, okay? 5 times getting heads, 5 times getting tails. With that being said, if that's the expectation of flipping a coin, then there should be an expectation of losing 5 times. The same thing with your strategy. If your and I'm guessing I'm gonna make the assumption that you are tracking your win rate on your strategy. You should, if you have a certain expectation of a win rate and losses, that should already be expected, right? And once you have that expectation and you are accepting that, then it will prevent you from making these emotional decisions, potentially even full porting an entire position and then blowing it out. Okay. So have the expectation, log your trades, figure out the win rate strategy. Okay. For me, on a good month, I have about a 50% win rate. On a great month, it'll be like 60. On a bad month, it'll be about 40%. Okay. I know my expectations, and that's pretty good. Believe it or not, this will lead on to the second step. A 40% win rate is actually really high if your strategy allows for that. Okay. So it comes to step number two. Uh, Allow for a RVR, which is risk to reward ratio, okay, of 3. This is really, really important. This is what allows me to have a high losing streak and still come out 92% year-to-date performance. Okay, it's always that's one of the edge to the strategy that I use, and your strategy should allow for this. Okay, what this does by having a minimum, and typically I say minimum, okay, my risk versus reward ratio is typically an 11, an 8, a 10, sometimes a 20, if it's there, if I can find that setup. Okay, and what happens is that when you go to the community here if you're in this community, there's a link in the description, it's free. Sometimes I post my winners. Sometimes I have a lot of losers. Sometimes it's flat days. The winners sometimes it's just small. Uh, so I know there was a week where I had like back-to-back losers, but I still came out profitable for the month of August because the risk versus reward ratio on the setups that we were finding were extremely high. Think of it this way, okay? And this should really start. This should start already making you think like, oh, I don't have to win so much. I don't have to put so much stress on myself. Let's say that you have 6 trades, okay? Trade 1 is $100 and they're all even, okay? Which this will again play into the next step that you need to actually follow through. Let's say it's a loss. Let's say, okay, 6 trades, that's about $600. We're gonna make them all equal here. Trade 1, 2, 3, 4, 5. Oops. Let me see if I can just copy this. Maybe it's too much. 1, 2, 3, 4, 5, 6. Okay, we'll just take 2 out. Okay, we'll say 2, 3, 4, 5. This is just basic math. let's say you have a minimum of 3. So you make 200 bucks, 200 bucks. Let's say we turn this into, you lose 100, 100, 100, 100, and you make 200 here, 200 here. Okay. If you take 6 trades, right? And the reason I say 200 is because all you did was turn 1 into 3. So the profit, 3 minus 1 is 200, of course, right? So if you risk $100, then and you turn it into 300 bucks, the difference is $200, okay? And these four trades are nothing but you lost $100. If you were to let it go to zero, right? That's in theory. You're not going to let it go to zero. You'll reduce the risk, but just to show you here, you lose 4 trades, you lost 400 bucks. You win trade 5 and 6, you won $400. You literally broke even, right? By having a minimum risk versus reward ratio of 3. Now, this is just on the P&L of, let's say, of an option contract, but you could do this on the stock or whatever. The point is that by having a high risk versus reward ratio, it does not mean having a high risk and high reward. It means low risk and high reward, okay? So it's just saying you're willing to lose $1 to turn it into 3, to make $2 extra, right? That is really good. So this already, again, when you have a minimum, okay, because it could always be high. Like I said, sometimes I aim for 8, 10, 11. This already takes a lot of stress, and I'm composed, which is what you want to be when you're trading. You need to stay composed during trades, especially when there is economic events or any of this other stuff. You need to stay composed. So that's step number 2. Allow for a high risk versus reward ratio. Most traders fail at this. Okay, so they naturally go through the ladder of expecting to win every trade. Most traders they don't even know. That's why they lose. They don't even know. Most of the time, it's a 1-to-1, which is almost like a losing. You have to win so much to be profitable in this skill. And the thing is, it doesn't have to be that way. This applies whether you're day trading, scalp trading, whatever you want to call it, swing trading, whatever. It does not matter. It's the same thing. Risk versus reward ratio is what matters in this game. There's a famous quote by some, I forgot, damn it, I think it's George Soros. I don't remember the gentleman. He's famous. He's a great trader. He has actually this quote where he said, I don't care. Like, he doesn't care how much you win, how many times you win versus lose. It's like, how much money did you make on your winners and how much money did you lose on your losers? And that's the important thing. And that is RVR. Okay, so always do this. Always care about risk versus reward ratio. This is the most important thing. How much are you losing on that trade versus how much are you willing to win? And as long as the outcome is higher than the loss, then you will be all right. Okay, so always track that. All right, number 3, which comes into the next play, because if you cannot do number 3, number 2 doesn't matter, and you'll go back to number 1, which will be like you expect every trade to win. All right, number 3, manage position size. Now, this is really, really hard for a lot of traders. Mostly, probably because you just don't have enough capital. But it doesn't matter. If you can't do it in a small account, you cannot do it in a bigger account. It will never work out. Okay? Stay small and consistent is the key. Okay, this is really, really important. Stay small and consistent. When I'm trading, I'm only trading every year. I typically start with around a little bit over a 6-figure account. I'm trading about 1% on options, maybe 3 to 4% on stock. Okay, because we trade both. Each one has their own different ways, their own different risk. When it comes, of course, like stocks, you're not going to lose like 50% of your value. You'll probably lose like 1 to 4%. And that's a lot smaller than what you would typically lose. It's a little bit, I would say, a little bit more aggressive. But on the options, I stay very consistent with either 0.5% or 1%. Okay. So this is really important because if you take one account that is, let's say, one of these trading accounts, and you're like, oh, I'm going to size into 300 and this is going to be $50. Like, you already blew up your account here, right? It doesn't matter about your winners. You could have a great high RVR ratio, a strategy that can allow for low win rates. But if you oversize, you blew up everything. Position sizing is the one thing that you can manage and that you actually have control of. So make sure that you stay small and you stay in the same size as much as you possibly can. Because at the end of the month, at the end of the quarter, at the end of the year, to be able to get this, you need predictable outcomes. And you cannot do that when your position sizing is dynamic, when it's inconsistent. Okay. So that's number 3. Make sure you follow that. Okay. Because like I said, if this doesn't work, number 2 will not work. And number 1 will default to that I have to win every single trade, and then you'll probably end up quitting. So that's number 3. Number 4, picking option contracts, because picking option contracts with plenty of time, with time. Okay. I know a lot of traders want to do these short-term expirations like weeklies or 0 days, but like I said before, if I already expect to lose every trade, that tells me that my brain is saying, I don't know when this is going to happen. I don't know if price is going to get to my destination today, tomorrow, a month from now. I have no idea. And the way I protect myself is by getting contracts with time. So if I'm looking at something, for example, like I'm looking for a monthly target, okay, I'm going to triple the expiration of that. Let's say it's 30 days to expiration. I'm going to get about 60 to 90 days out. That way I have enough time on my end for this thing to play out the way it may play out. And I'm not going to say that it's going to. It may play out. I have no idea. But by having so much time, those intraday movements, I don't lose as much capital. And again, it allows me to, when I have time, it allows me to have these high risk versus reward ratio, which then allows me to put a lot less stress on myself, which is number 1, not to expect to win every single trade. I can expect to lose a lot of trades and still come out profitable. If you get a weekly, you're going to lose about 50% very, very short, very, very fast. If I get 90 days out to expiration, that intraday movement, maybe I'll lose 15%, which is a lot better than 50%, right? At the end of the day, this game is about survival. Okay, there are plenty, like I said, every single trader goes through drawdown periods. And sometimes they can be daily, they could be back-to-back weeks, they can be for back-to-back months. And you need to keep that into the back of your head, in the back burner, right? All right, so that's number 4. Number 5, let's see. Oh yeah, choose strikes with high probability. Now, one of the biggest mistakes that folks do is picking wrong strike options. Now, if you're trading stocks, honestly, by number after 3, it doesn't really matter a whole lot. Well, actually, number 4, number 5 doesn't really matter. Number 6 and 7 will matter if you're trading stocks. But if you're trading options as well too, number 4, number 5 are really important. When it comes to picking strikes, one of the common problems is picking cheap contracts. Okay. And what that does is that, 1, it lowers your delta. So it's already, you're not going to make a whole lot of money from these price movements on the stock, even if it goes your direction. You already have low gamma, which it's like not accelerating the delta, which is not going to put more money in your account. And also just because they're cheap. Okay. Cheap contracts cost you in the long run. Okay. So pick contracts that have high probability. I always tell everybody inside the Telegram group, and then when I'm picking strikes myself, it's always between the deltas of 38 at a minimum of 25. The gamma is high enough to give you a nice boost in delta, which will ultimately make you a lot more money. Now, I love leap contracts. Sometimes when it comes to picking contracts with time and strikes, leap contracts, one, they're less volatile, and two, you make more money upfront because the deltas are so high. They're more expensive, but they're higher quality. And who cares about the percentage of the contract? And I don't care about that. What I care about is how much money is coming into the account, and how much money can I collect upfront than these lower strikes, right? I don't care about these high percentages. You know, some folks get 120%, 100, 200% with the call outs that I do in the Telegram group. But I have plenty of time, and I'm making a lot of money just with the higher deltas. Okay. So that's okay. But, you know, to me, I prefer leaps because I can collect more premium much faster as well too. So number 6, okay, stop relying on lagging indicators. Okay, this is really, really important. I want to show you something here which you can learn from. You can learn this stuff inside the school community. I have an entire classroom on this stuff. There is a tool here that I use called Gextron, and it's helping traders make money. You want to use tools. You want to use that is forward looking, that's always looking outward. Okay, a lot of the money's meant to be made on the right side of the chart, not on the left hand side. By using indicators, you're already defaulting to like, price is not random, price will go this direction and it should follow this, but that's not the case. Price is very random, and what you want to do is use tools like Gextron, which you can get a free account if you go into the school community and tell me that you want an invite, because Gextron is always looking forward looking. It uses the option Greeks, it uses implied volatility, and it makes it really simple because you get this basic chart right here, and all you have to do is just put it on your chart. Okay, draw the lines horizontally. There's a whole video on this inside the group, and we're doing a training call on Monday as well too, which will be September 22nd. Okay, and by default, Gextron is saying, hey, before price gets to this point, just know here are the levels that are going to get in the way, right? So right now it's 670 is the biggest level of resistance. We haven't even hit 670 yet, but it's telling you when price gets to 670 with SPY, it's going to be a big level of resistance. And also the thing about Gextron is that it has price targets by a specific date. So this is really, really powerful because I'm no longer guessing where price can go and by when. I have a clear outline of entries and price targets, which is exactly what David said here. He said, I use Gextron to find targets and entries. I love this tool. Thank you so much for all the hard work. So all I have to do here is just pull up this little chart here by clicking on this, and it's given me all the months for that given that are available for that security. So in this case, SPY. And let's say I want to know what it looks like for January. We have about 47-point move up and down from the current spot price that it's at, 663, right? So then now I know what to expect to the downside and to the upside by that given expiration date. And that way I don't have to guess. So I'm like, okay, great. So maybe we can hit this all-time high. Then I'm gonna double the expiration, the days to expiration, let's say 200, and then pick that target, right? So now I have something that I can get to by a specific date, and I'm gonna get extra time on my option contract, or if you're doing the shares, that way I can protect myself from intraday movements. It's really, really useful when you're using tools like this because it takes a lot of the guesswork out, and you can see what are the biggest resistance at specific levels when we get there. Okay. So use tools that are forward looking. Stop relying on lagging indicators. The market does not care about what happened yesterday, 2 hours ago, last week, or last month. That's over with. We only care about what's going into the right side, what's in the future. Okay, number 7. Okay, immerse yourself in trading groups. This is really important. Okay. I run a trading group here, and I would love to say that everybody is active, but the truth of the matter is that most traders are a bunch of lurkers. They go in there, they never state what their problem is, they never get immersed with the trader that they're looking for help with. You need to immerse yourself. I wrote a post here that's really, really important. I'm actually going to share with you in this video because it's it's the fastest way to break out of being a unprofitable trader. If you want to be a profitable trader as quickly as possible, you need to immerse yourself. I said it here in the very first few sentences. I said the secret to becoming a profitable trader as quickly as possible is this: spend an absurd amount of time with people who are better than you. That is it. Any big leaps that I've done in my life, engineering, getting in shape for the summer, trading, I've spent an absurd amount of time. And it doesn't hit you all at once. But what happens is that when you spend so much time with people that are better than you, let me see, I said it here. You will adopt their thinking habits, their discipline, their reaction, all the good stuff that you don't have. It doesn't happen all at once, but over time, it will accelerate than what you would have been if you hang out with level ones. You only get as good as level ones. You need to hang out with people that are level 3, 4, 5, 6, right? People that are way better, so you can get to those levels. You can think the way they think, you can act the way they act, you can have the same discipline and composure like they do, because otherwise you're just getting yourself stuck. You're not doing yourself a favor. You're stuck at level one. If you're with level ones, you will be with level ones. Spend an absurd amount of time with people, even if that means paying money. Okay, if you really want this to be a thing, even if that means paying money to spend time with people, do so. If you can't, try to find people that maybe do it for free and that are still better than you. Okay, you never want to be the best one in the group. Always spend time with people who are better than you. That is the fastest acceleration to becoming a profitable trader. If you want to get results like I do, this is the framework and the mental model that I use every single day. Okay? If you have any questions, if you want to join the group, want to trade with me, I'll put a couple links in the description box. If you want to get access to Gextron, there's free invites that I'm sending out. Limited spots, though, that will be inside the school community, which is, again, free. If you have any questions, put them in the comments down below, and I'll see you on the next one.